Welcome to Resilience and Resolve with Lance Drury.
Welcome back to Resilience and Resolve with attorney Lance Drury. An IRS payment plan can feel like progress, a chance to get breathing room and move forward. But sometimes life changes, payments get missed, and the agreements falls apart. I'm your host, Evan Mack, and today Lance is explaining what really happens when a payment plan goes into default and how taxpayers can get things back on track before the situation gets worse. Lance, sir, welcome back.
How you doing, Evan?
I'm well. Yo, Lance, when someone defaults on that IRS payment, what does that actually mean in practical terms, maybe layman terms?
Well, what it means is you no longer have an agreement with the IRS, so it's fruitless to send in voluntary payments because they can still levy you. And so they are going to levy you. And so, as a practical matter, the significance is, and this is what the IRS goes after, they're going to go after your bank account. The good news is that levy's only good the day it hits. Now, we're not talking about state tax liability. That's a whole nother story. But with the IRS, it's only good the day it hits, but they can do successive levies. And again, they can go after 90% of your take-home pay. What are you going to do if they take 90% of your take-home pay or wipe out your bank account? And if you're a 1099 paycheck, they can take the whole thing. Now, as a practical matter, if you're in a business where your clientele changes, you don't really have to worry about the 1099 because the IRS will only look at who worked with you from the prior year. They're not going to go out and see who you're dealing with currently. But guess what? If you have an employer and you've been working for him for 7 years and you get a 1099, you're going to get zapped and you're not going to see anything of it. So that is the significance of the default on any installment agreement that you have, because one of the conditions of any installment agreement is that you're going to be 100% compliant moving forward. So it's not only a missed payment that can default the agreement. If you don't file on time and pay on time in the future, that installment agreement, that deal with the IRS goes down the drain.
So what causes that payment to fall apart? Is it financial strain, missed notices, or do you find it to be something else in your experience?
Well, it can be a lot of things. Normally, something's going on with the taxpayer. Maybe, they're self-employed. Somebody went belly up on them, so to keep the business going, they pay their suppliers, they pay their employees, and they think they'll catch up with Uncle Sam next month, and it just kind of snowballs, and that's going to affect the agreement. So hard economic times, if we go into a recession, business is slow, that's going to cause a lot of people to default on their agreement. So that's one of the most typical things. The other thing that happens is, and this is so frustrating to us and to the taxpayers, we set up an agreement with the IRS. It's a direct debit, but this is how screwed up the IRS is. And so we don't get out of the case until we know that first direct debit has taken place. And guess what happens, Evan? They don't take the money out of the account. So we call them back up. We set up another agreement. We wait for the money to be taken out. Guess what happens? The money's not taken out. We have to do that sometimes 3 or 4 times because the IRS is not doing their job. They're not, and it's not all their fault. They are not funded properly, but I've never seen the IRS so screwed up. They're so far behind. They're still behind from the pandemic.
Wow.
And they're making more mistakes because their people are not trained properly. The ones in the automated collection system, your revenue officers, your settlement officers, they've been there a while. They're highly trained. They know the rules of the game. But those people in collections, we get them all the time. And here's what I do. If they don't know what they're talking about, I tell them, I got somebody sitting out in my lobby waiting to talk to me. I got to go. And then I hang up and I call back until I get somebody that knows what's going on. But yeah, it's a mess. The only thing is screwed up is the IRS, Evan, is the Postal Service.
Oh yeah, ain't that the truth? But Lance, when a plan goes into default, though, how quickly can the IRS move? What actions can they take?
Well, like I said, they can come after you and levy you. That's the primary action that they're going to employ when the thing defaults. The good news is that once it defaults, you can call them back up and set another agreement up. So it's not fatal, and you know it's they're not going to levy you the day after you default on the agreement. They're a bureaucracy; things take time. So if you do default, you do have time to hire somebody to help you with the financial analysis, and then to call the IRS up and get a new installment agreement with the IRS, and that'll fend off any potential levies.
Mm. So you've helped a lot of clients in your career, though. When these agreements fall apart, do you have a story where someone came to you after a default and you kind of helped turn their situation around?
Uh, yeah, I'm sure there are several stories. One doesn't come to mind, but I can tell you one. Just a few years ago, I had a client out of Illinois come to me about an hour away, and they came down. We had a phone call with their accountant, and they came down to meet me as well. And they had been levied. They had a group out of Colorado. They paid them $30,000. They owed more than $1 million.
Mm.
And what happened was the revenue officer had given them paperwork. It's called a summary of taxpayer contact, a form 9297. As soon as we get those, we send them to the client because we're under strict deadlines, normally 15 to 20 days. So we want to give them as much time as possible to get us the documentation. And this outfit in Colorado was giving it to them the day before the deadline at the earliest. And so what ended up happening, they got levied for over $1 million.
Oh my God.
And they had two levies. So they wanted to guarantee out of me that we were going to get the levy lifted. I said, I can't guarantee you that or anything else. They could take my bar license if I guaranteed them anything. I
Mhm.
said, we've had a good track record with getting levies lifted, but every case is different. So they called us, paid by credit card the next day at 7 o'clock because the St. Genevieve office opens at 7 in the morning. And by the time the day was over, we had gotten both levies lifted within a month or so because revenue officers want to act quick. We had a installment agreement set up both for the business and their personal, and they were only going to pay like 25-30% of the total tax. So they were ecstatic. They had gone through all. Now they paid us more than what they paid the outfit in Colorado, but the difference is they didn't do the work. We did the work. We had to do a lot of work up front because revenue officers want everything. They want it now, but we got it taken care of for them, and they were happy.
Mm. When a taxpayer realizes the default has occurred, what's the first step they should take before the IRS escalates their case?
Well, they need to call us. They need to go to lancedrurylaw.com, and depending upon where they're at, Missouri, Tennessee, Texas, give us a call. There's the various phone numbers there. Don't don't procrastinate. My clients are procrastinators. That's what got them into this trouble. And so you got to deal with it right away. It's not a good strategy to put your head in the sand when you're dealing with the taxing authorities. And
Mm.
Evan, here's the deal. There's 26 million delinquent taxpayers right now. In 6 years, get a load of this. There's going to be 35 million
Oh
delinquent
God.
taxpayers. I'm glad I'm in the prime of my life, Evan, because I got job security. I'm going to be able to do this for another 15 years.
Yeah, yeah, we're gonna keep it going. We're gonna keep this going as long as we got these delinquent taxpayers. We're gonna keep Lance Drury in business for a
Yeah,
while.
and remember those hostile takeovers that I'm involved in.
Listen, he trying to take over all 50 states, baby. But listen, I want to see a Lance Drury in every state.
Well, I don't know. I don't think that'll happen, but we're in Texas now, and within 2 years, we'll probably be in Miami and then Los
Wow.
Angeles.
That's awesome. That's awesome. Documentation matters in these situations, though, Lance. What information does someone need to gather to show the IRS they can stay current moving forward?
Well, the first thing is they've got to fill out the financial statements for us. Those are
Mm.
very confusing, complicated to the average individual. We look at them all the time. Nobody fills them out right. That's where they get the biggest bang for their buck in hiring us, because we'll tell them what we need. Then we got to go through bank statements, credit card statements, debit card statements, because for certain categories of expenses, we have to prove to the satisfaction of the IRS that their actual expenses exceed the national standards. So that's what we do every single day, Evan. I tell everybody there's 3 rules if you don't hire me. Hire an attorney that does this kind of work every single day. Don't get anybody that dabbles in it. Don't hire an accountant. We've all seen accountants give atrocious advice because they're great at the numbers, they're great at tax prep, that they just dabble in this. We've seen them put tens of thousands of tax liability on the books for their clients that they don't have to do. Number 2, go local. In all these offices we have somebody that services those offices. And number 3, don't hire one of the big boys. There's a lot of scam artists out there. All they do is take your money. They don't do any work for you, and they never tell you at the outset what this is going to cost you.
For taxpayers juggling multiple obligations, Lance, what helps prevent a new payment plan from running into that same issue as the one before?
Well, you got to stay on top of this. You got to pay your taxes when they're due. You got to just make sure, and don't wait. If you're self-employed, I tell everybody this, realtors are the biggest problem. Here's what happens with realtors. They get a commission in the first quarter of the first month of the quarter. They don't get anything in the second or third month of the quarter. Tax becomes due. They've spent the money. There's nothing magical about waiting till the end of the quarter to pay Uncle Sam. Uncle Sam will take your money anytime. So I tell them when they get that commission, or any 1099 employee, or if they're self-employed, I tell them no less than every month you send in an estimated tax payment. Because if you wait till the end of the quarter, guess what? You will have spent the money. And so the beauty of all that is, if you're making those estimated tax payments, you can get a better deal on the back taxes. So it's a win-win for the taxpayer. He stays compliant. He keeps the IRS off his back going into the future, and he gets a better deal on the back taxes. So that's what you have to do if you're self-employed. Don't wait till the end of the quarter. When you get that commission, send 20 to 25% into Uncle Sam. Notate the check properly. It's got to be notated for the current year, or the IRS will apply it to the back taxes, which defeats the whole purpose of sending in the estimated tax payments. When you hire us, we'll do that for you, or we'll tell you how to do it if you're going to file it electronically. And then we get confirmation electronically that you did it right, so that you're good moving forward.
And finally, Lance, for someone who is worried they may fall behind on their next payment, what concrete action can they take this week to keep the agreement in good standing?
Well, just pay the agreement on time. Just pay it when it's due. That's what you have to do. If you don't, you're going to get one of those nasty notices, and they're going to tell you that they're coming after you. So just make sure that you're not only current on any installment agreement that you have, so you don't get it defaulted, but also that you're current on your estimated tax payments, so that when the big tax bill comes due next April, the money's already been sent in to the IRS and you don't have to worry about it.
Awesome. Lance, thank you so much, sir.
Thank you, Evan. It's always a good pleasure to see you. And I'll give you an update later on my hostile takeover.
You gotta let me know how it goes. Thank you so much for joining us on Resilience and Resolve with Lance Drury. A defaulted payment plan isn't the end, but it does require quick, thoughtful action. To learn more about working with Lance or to get help staying ahead of the IRS, visit lancedrurylaw.com. And don't forget to leave a review, and subscribe to the show so you never miss an episode. Thank you so much, and we'll see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.